So to kind of wrap up that answer, we typically want to see at least 3 to 7% down today, but up to 10 to 20% over time. So what I mean by that is, like, if we sell a property for 300,000, let's say we collect $10,000 at the closing, right, the formal lease time before they move in the house, and then every 6 months we might structure, say, $5,000. So now over the course of, say, 2 years, they're 30,000 in, right? Now all of a sudden they have a good sizable deposit. We're creating like we're gathering lump sum, so it's good for us, but it's also great for the buyer to show to the bank. And again, that's what's going to help them qualify for better rates, which means they're more likely to actually go get a bank loan.
Yeah, it is. So then they're willing down, so for that 95, they're now at 90 or 85, depending on the appreciation of the property. But that's a much more secure loan as an ex-banker that banks will look at, and they'll rate term refinance in a lot of cases or something like that. They'll be excited about that because there's that skin in the game and the payment history showing that this is a good solid borrower. And a lot of people forget about that. And that's the great thing. People get so caught up in, well, I got to have 50 grand down. Well, I don't have 50 grand, but I got 10 grand down, and I can put 5 grand every 6 months or something like that to make things happen. Just getting creative and keeping an out of the box mindset is important. I also want to kind of reiterate that, though. How many times do you feel like you're banging your head against the wall with realtors that have a very closed inside the box mindset